morning, I'm James Gruber and welcome to the morning report for Monday the 13th of April. Well, it was significant what happened over the weekend, despite a deal not being reached between the US and Iran. It was the first direct US-Iranian meeting in more than a decade, and the highest level discussions to take place between the two parties since the 1979 Islamic Revolution. But they were unable to see eye to eye, so that means no end, for now, to the hostilities. We're still in the period of the fragile ceasefire. It's in place for another week or so, and the US president said a short time ago he still believes Iran will continue to negotiate, but the situation remains very tense. It's worth looking at the key point that's been causing volatility to the world economy and the price of oil since February 28, the Strait of Hormuz. A reminder, it's a choke point for around 20% of global energy supplies, and for weeks now has been blocked by Iran. Donald Trump has been on social media following the failed talks, saying the US Navy will immediately start blockading the Strait of Hormuz themselves. He said he's also instructed the US Navy to take action against every vessel in international waters that has paid a toll to Iran, and warned of retaliation if any Iranian fires on them. Iran's response? That would be considered a breach of the ceasefire. So, things are on edge, to say the least. What will markets think of this? Well, US futures opened a short time ago, with S&P 500 futures down about 1%. As for the Aussie share market, ASX 200 futures earlier pointed to a 0.9% rise at the open this morning, but that hasn't taken into account the most recent developments and action with the US futures. A reminder, on Friday, the ASX 200 ended lower, dropping 36.7 points, or 0.4%, to 8,937. But over last week, so the last 5 days, the index has gained 4.16%. It was our market's best weekly advance in 3.5 years. Moving to commodity markets, global oil prices fell on Friday as President Trump said the Strait of Hormuz would open fairly soon, but that was before he later ordered a naval blockade of the strait. Brent crude dropped 0.8% to $95.2 a barrel. Base metal prices were higher on Friday. Copper futures hit their highest in more than 3 weeks, up 2.1% on supply concerns, while aluminium futures also finished 1.6% higher. Gold futures drifted lower on US-Iran talks as they ramped up. The futures settled 0.6% lower to $4,787 an ounce. Iron ore futures were relatively steady, up 0.3% to $106.63 a tonne. Let's look at currencies now. The Aussie dollar was last trading down 1% to 69.96 US cents as investors reacted to the weekend standoff in talks and the US naval blockade. Let's go back a step now to see how Wall Street and other world markets did. The Dow Jones index finished down 0.6%. The S&P 500 index was 0.1% lower, while the Nasdaq index was 0.4% higher. Wall Street wavered on Friday, with investors pressing pause as they headed into the weekend and kept an eye on those ongoing Middle East peace negotiations. A closely watched inflation report showed consumer price growth accelerated as expected due to price pressures arising from the war on Iran. On a weekly basis, all 3 indices scored their largest Friday-to-Friday percentage gain since November. Of the 11 major sectors in the S&P 500, consumer staples were down the most, while tech shares led the gainers. Chip makers took the lead, touching a record high. Broadcom and Nvidia advanced 4.7% and 2.6% respectively. Financial stocks underperformed ahead of major US banks posting earnings this week, marking the unofficial start of first quarter reporting season. US-listed shares of TSMC, the world's largest contract chip maker, rose 1.4% after it beat first quarter revenue forecasts. CoreWeave surged 10.9% following its announcement of a multi-year agreement with Anthropic. On the US economic data, the labour Department said the Consumer Price Index jumped 0.9% last month, the most in nearly 4 years, and 3.3% in the 12 months through March, in line with estimates, as the Iran war caused a surge in oil prices and tariff pressures continued. A separate report from the University of Michigan showed consumer sentiment plunged this month to a record low. US government bond yields climbed on Friday after the inflation reading that largely matched expectations. The US 10-year Treasury yield was 3 points higher to 4.32%, while the US 2-year Treasury yield was up 2 points to 3.80%. To the European markets, the continent-wide FTSE Euro First 300 index ended 0.4% higher, while the UK FTSE 100 was flat. So while Europe was mixed on Friday, the European-wide index notched its third straight week of gains, with cautious optimism towards US-Iran talks, but we know how that's played out since. The Aerospace and Defence Index fell 2.2% after a Bloomberg report that Ukraine and Russia were heading towards a potential deal. Financials and tech stocks boosted the index with gains of 1.3% each. Among other movers, Sodexo shares fell 10% to a 6-year low after the French food caterer slashed its annual sales and profitability targets. So let's take a look at what's on the watch list. In Australia, there are unemployment figures released Thursday, with 4.2% tipped. The RBA Deputy Governor Andrew Hauser and Assistant Governor Sarah Hunter are taking part in panel talks in the US this week, which may shed light on what our central bank is thinking at this juncture. And there are a host of ASX companies making dividend payments this week, including Car Group and Cochlear today. In the US, first quarter 2026 earnings season kicks off with the major banks this week. And that's it for today. For further developments on the local trading session, please tune in to the CommSec Market Update podcast this afternoon, and of course, the Market Close video. Have a great day.